a spouse to whom he is married in community of property. X has a will, and in this will he leaves his entire estate to his son Y. Okay. Now we have this immovable property. The third step to description is, where does it go? Well, first of all, half of everything needs to go to the spouse because they're married in community of property. That's what the question is saying that I'm making up. Therefore, would show half to the surviving spouse by virtue of marriage and community of property. The remainder needs to go to Y, who is the heir, because of the particular will. So when you're doing your liquidation account, I can just mention, you'll be describing your assets. You'll have your heading liquidation account. You'll indicate assets, and you'll have your movable property, and you'll describe it. You'll say how did you come to that valuation, and where does this asset go? This you get from the question. Okay. Once you're done with that, you number every single thing you do, every different item in your liquidation account. You just number, and then you go and you put down the value of the asset. Generally, the far right column is your plus column, so that's where you indicate your assets, where the column just next to it is where you would indicate your liabilities. This column you can use for any calculations that you may or may not need to do. All right, so once I've mentioned my movable property, I've put my 2 million value there, I move on to movable assets. Once again, if it's a vehicle, I'll say with the type of vehicle. For example, it's a BMW, I'll say the registration number. Step 2 is who valued it. Maybe BMW Motors did the valuation, I'll specify that. Step 3, I need to indicate where's this vehicle going, and half is going to the spouse and half is going to the heir, depending on what the question is saying. But you do that with every single asset. And you keep numbering it. The house was 1, the vehicle was 2, maybe there's a gun, a firearm, there's 3, maybe there's coins, it's 4. And you carry on listing your movable assets. All right? So, as mentioned, we have the immovable assets and we have the movable assets, but we said there are 3 different types. You also get claims in favor of the estate. Okay? And it's very important to distinguish between the different types of assets. Something to remember, when you come to companies in a state, whether it be a private company or a public company, a company always falls under movable property. Okay? Keep that in mind, remember it. You will note the exception with companies is you do not give the valuation, the specific wording. When you come to a private company, you speak of an auditor's valuation approved by a chief revenue inspector. That's the second part of describing the asset. Very important to remember that. You'll see by public companies, they speak of per stockbroker's valuation. Just study work, and that needs to accompany your companies. But like I said, that is under movables. The third aspect of assets was claims in favor. You'll have to look at the question, but things that typically fall under a claim in favor of an estate would be an open bank account and specifically policies, which is actually a very, very important aspect to the L&D account, what I'm assuming you guys would be tested on vigorously. Now, if there's a bank account, that will come under claims in favor of the estate, and so will a policy. Policies will be brought to you guys in different ways. They might ask you sort of trick questions or ask you different life policies, etc., and you need to know what goes where, okay? Now, remember, we're dealing with the liquidation account and we're dealing with assets specifically. Now, we're dealing with policies that count as an asset in the estate. I mean, if the question specifies there is a policy but there's no beneficiary, the moment there's no beneficiary, that policy would go directly into the estate and it would be a claim in favor, okay, of the estate in your liquidation account. The moment they start speaking about a life policy, okay, we need to read the question very, very carefully. Reason being is you might have a policy over your life that is payable to someone else. Okay, let's call that person X. Now, I pass away and there is a life policy of 500,000 Rand that is getting paid to X. Okay. One needs to keep in mind now that money is not my money. It is money that's going to X, right? Therefore, that's not going to form part of my liquidation account. However, the opposite can also happen. There can be a policy over X's life that pays out to me, but now I pass away first. Okay? Would you agree that policy over X's life is a policy that's going to pay out when X passes on, and when X passes on, that money is going to pay out to me. So it reaches maturity value when X passes away, because then the money gets paid to me. But if I pass away first, that policy hasn't reached maturity value because X is still alive. Therefore, surrender value is paid out to me. You will note from your questions, they give you different examples. They give you scenarios when there's no beneficiary. We need to understand that if there's no beneficiary, it just falls in our estate. If it's a policy that's over my life being paid to someone else, it's not my asset. But if it's a policy that is over someone else's life, that's to be paid to me, and I pass away first, that money needs to be paid into my estate. So it is an asset in the liquidation account. However, the amount that's going to be paid out to me is going to be referred to as a surrender value because that policy never matured. All right, you'll need to work through that. They love, I do believe that those type of questions are very, very important. So those are your three different types of assets in your liquidation account: immovable property, movable property, and claims in favor. Right? Once you have done all of your assets or calculated all your assets, you'll obviously come to a figure. All your assets are calculated, they're numbered, and you're going to put this figure here. This figure is now your total assets, all right? Or in other words, the gross value of your estate, okay? Which is half of the point of a liquidation account, is to calculate what the assets are, okay? Once I've calculated the assets, I then need to move on to my liabilities, okay? Now, liabilities, we deal with three different sort of factors. Three figures or three amounts that need to be deducted from my assets. Okay. First one being what's referred to as administration expenses. Now, easiest way to think about that is that administration expense is an expense incurred in winding up an estate. Okay. So let's think practically. When I winded up the estate, you'll recall we had to do two advertisements, a Section 29 advertisement, a Section 35 advertisement. You agree that costs money. Now, that money needs to be paid from the state. It's administration expense. There was bank accounts that were opened or closed. There's bank charges. Bank charges is administration expense. If there's a movable property, that property will need to be transferred in terms of my will, or in terms of intestate succession. There's transfer costs. That's an administration expense. Any expense incurred in winding up the estate. I mean, two administration expenses that are always be there as well is executors' fees. We as executors in winding up the estate, what are we being compensated? We are receiving 3.5%, so 3.5% of the gross value of the estate, the total assets, right? That is our payment for winding up the estate. So 3.5% of the total assets, executors' fees, our fee, that's an administration expense. The master's involved. The master needs to be paid as well. Now, the master receives 600 Rand for his or her duties in winding up the estate if the estate is less than 400,000 Rand, the total assets. Okay. If the total assets in the estate are more than 400,000 Rand, the master starts receiving more money. The master receives extra money for every amount above 400,000 Rand. This now needs to form part of my administration expense because once again, it is an expense in winding up the estate. So I hope you get the point. Any expense in winding up the estate is an administration expense, which is obviously a liability towards the estate. So that needs to be deducted from the assets, which we will do under liabilities. Another form of liability would be creditors. Remember, we needed to do our 29 advert, where we needed to make an advertisement and tell the creditors they have less than 30 days, but not less than 30 days, but not more than 3 months to lay a claim against the estate. So all these creditors laying claims. Maybe you owe money in your mortgage bond to FNB. Maybe you owe finance to Westbank. You owe Edgar's money. Whatever the case may be. Anyone who's laid a claim against your estate will then need to list those liabilities. Okay. So at this point, we'll have a scenario, or you'll note from your books, you have a scenario where you have your total asset value, and from the total asset value, you would have minused your liabilities from that figure. All right. So you'll list your administration expenses, put the figures in. Liabilities will be in this column now, right? So it's plus and minus. And after that, we'll list our creditors and we'll put the figures in. Okay. Now, you will also note that there is one other amount that also needs to be minused on liquidation account, and that is referred to as estate duty. Now, you recall we spoke about this as tax. Tax the estate needs to pay. Okay. So when we speak of estate duty, there's a simple formula that you need to follow, and this is the easiest way I can explain it. Like I said, the contact lectures is vital for your L&D account, but let's try and get an understanding of how we calculate estate duty. So at this stage, assets minus liabilities, which included our administration expenses and our creditors, minus estate duty, gives us what we refer to as our balance available for distribution. You'll note that from your books. But we can't get the balance available for distribution at this stage because we do not know what our estate duty is. Therefore, we need to move on to the second aspect, or the second account in our liquidation account, in our liquidation distribution account, which is going to be our estate duty addendum. Okay, remember we said there's 6. First one is the liquidation. We almost finalized it, but we first need to do our second account now, which is the estate duty addendum. Get that figure and then come and bring it into our liquidation account. Okay, so when we speak of estate duty addendum, we speak of assets, all right, minus liabilities, minus a rebate, and we get what we refer to as a debitable amount. 20% of that is our estate duty. So we need to figure out what classifies as assets, what classifies as liabilities, what is our rebate, and what is 20% of that figure. Okay. So if you were doing your estate duty account, your first step was to take your asset figure. Now, keeping in mind, the answer of this sum is what we're going to have to apply to our liquidation account, because that's going to be the estate duty payable. Okay. So the first step of the sum would be assets. Right? What is an asset? Where do we get our assets for the estate? Quite simple. We go to our liquidation account and we go to our total asset figure. Right? That is the assets in the estate. We then apply that to our estate duty account. We put that figure down. Okay. But there are certain exceptions and certain rules that we need to take into account. So that asset figure is a figure we're going to be taxed on. But there is ways that the law allows us to minus or minimize that asset figure. Okay. Classic examples that you would come across from your notes is you would note, for example, if your immovable property is a bona fide farming undertaking, 30% of the value of that property can be minused from your asset figure. Okay, so let's say the question says the deceased has a bona fide farming undertaking worth 1 million rand. That's immovable property. We went and put that million rand in our liquidation account under assets, under immovable property, right? Now, in our estate duty account, we can minus 30% of the value of that property, which is going to be 300,000 rand from our asset figure. So that is a figure that can be minused from our assets. All right. Another example of things that could be minused from our assets would be what is referred to as a difference in private shares. So, practically speaking, when we did our assets in our liquidation account, we said private companies fell under movables. This was a company. Okay. The question may perhaps say, you have shares in a private company, and these shares are worth 140,000 rand. Okay, but these shares were sold for 200,000 rand. So you agree the shares are worth 140, but they sold at a different price. Okay. Now the difference between what the shares are valued and what they're sold for is what we can minus in our estate duty addendum. So we can minus that from our asset figure as well. Okay. So what I'm trying to do is trying to give you guys things that you would regularly come across. Okay. So in our assets, the first part of calculating estate duty, we took our figure from our liquidation account And examples of things you could minus there is 30% of a bona fide farming undertaking, as well as the difference in the value of private shares, what it's valued at and what it's sold for. Okay. Once you've done that calculation, you have now your asset figure. But there's a second part to assets, right? We also need to add what is referred to as property deemed to be property. Okay. Now, common examples of property deemed to be property is any donations the estate received, any accrual claim. Let's stop right there for a moment to make sure we're all on the right track when it comes to accrual claims. When it comes to any estate, obviously the marriage regime is crucial. Right? If you're in community of property, the spouse is entitled to half. If you're out of community of property, we get two forms. We get the out of community of property with accrual, and we get out of community of property without accrual. Without accrual is basic. It's just completely out of community of property. It's yours is yours, was mine is mine. But then you get out of community of property with the accrual system. This means everything up until the date we got married, what's yours is yours, what's mine is mine. But from the date we got married, any assets we accrued from that date till the date the marriage is terminated is divided 50-50. Okay? So you might have been married, out of community of property with accrual. And during that marriage, your estate grew more than the spouse's estate. Let's say the deceased estate grew more than the spouse's estate. You agree that the spouse would then have a claim against the deceased estate, according to accrual. If it was the other way around, if the spouse's estate grew more than the deceased estate, the deceased would have a claim against the spouse's estate. That's how accrual works, because it needs to be split 50-50, how your separate estates grew from date of marriage. Okay, so if I, as the deceased, let's refer to it as the deceased person, the moment I become deceased is the moment the marriage is terminated. So now we have to sit and calculate the accrual if we're married out of community of property. Okay, let's say we calculated and it's figured out that the deceased estate has a claim against the surviving spouse. Okay, that is now money that needs to come into the estate of the deceased. It was not listed in our liquidation account. It didn't form part of our assets, but it forms part of property deemed to be property. So we need to add that figure to our assets. Another common example of property deemed to be property is life policies on the life of the deceased. Now, we spoke earlier, if you remember when we just mentioned policies, we said that a life policy that was on the over the deceased life payable to another person is money that goes out and gets paid to this other person. Therefore, it does not form part of the deceased's assets in his liquidation account. Fine. However, for estate duty purposes, it's still regarded as property deemed to be property. So what I'm telling you is you have a life policy of your life that's payable to X. You pass away, that money gets paid to X. It's fine. For tax purposes, for estate duty purposes, that money that's not getting paid to you but be paid to X because of a life policy of your life is regarded as your property when we calculate estate duty, right? That is the term property deemed to be property. Life policies of your life gets reflected there, because remember, it didn't get reflected as an asset in our liquidation account. Accrual claims that the estate must receive gets reflected there. Donations get reflected there. You will note from your study guides, they have headings where they speak about what's property deemed to be property. Very important to read through that. Okay. Now, you know, in essence, that is the first part of our estate duty, was our assets. Okay. Now, what happens is we need to deduct two separate figures from our assets in calculating estate duty. Remember, we're on our second account here. Okay. What we deduct from assets is what we refer to as allowable deductions. Now, you will note from your books that there are roughly, I think, 10 different allowable deductions. Okay, so you need to please read through that. Okay, and these are figures that need to be minused from our assets in our estate duty addendum. Okay, what is examples of allowable deductions? Things like your liabilities. Okay, where do I get my liabilities from? I get it from my liquidation account. underneath liabilities, that was my administration expenses, that was my creditors. Liabilities then get deducted. Other things that get deducted, examples is any charitable bequests. If you say I gave 100,000 rand to this charity, then what the state duty says is it says we won't tax you that 100,000 rand. Therefore, we can minus. It's an example of allowable deduction. Foreign assets, assets in another country that's yours, is minused. Does not form part of a state duty. As there are a number of different examples. Accrual, for example, on the other hand, needs to also be minused. Okay? Because just like we can receive accrual as property deemed to be property, we also might need to pay accrual to the spouse. Okay? So it can go the other way around. And sort of as a broad one, anything that accrues to the surviving spouse can also be deducted. So let's say you have a life policy and the life policy pays out to your surviving spouse when you pass away. Now remember, that life policy, we didn't put it on a liquidation account as an asset because there's money going somewhere else. But we did put it in our state duty account as property deemed to be property. However, allowable deduction says anything accruing to the surviving spouse as a result of the deceased death. As a result of the deceased death, there was a policy paid out to the surviving spouse, right? That policy is now deducted in the allowable deduction section. Okay? You need to go through your examples of allowable deductions, just like the deemed property. Very, very important for estate duty addendum purposes. Okay? At this stage, you should have a scenario of assets that we got off a liquidation account, minus certain things. We spoke about difference in private shares. We spoke about 30% bona fide farming undertaking. From that figure, we added our deemed property. We gave examples of that. All right. Then we got to a different figure. From that figure, the next step was to minus the allowable deductions, which you find in your book. We've mentioned a couple of them now. From that figure, you will note that they then go and minus what is referred to as a rebate. Okay. Currently in South Africa, a rebate is 3.5 million. Okay. So that is sort of what they're saying. If your figure above it is below 3.5 million, you're not going to pay tax. If it's above it, you're going to pay tax. Let's try and make this practical. Let's say our asset figure, our assets, which included our liquidation account, plus our deemed property, altogether made 4 million rand. Okay. Then we had allowable deductions that we had to minus from that. Let's say our allowable deductions came to a figure of 1 million rand. You agree currently we're sitting on 4 million, minus the million, we're sitting on 3 million rand as a calculation. The next step in estate duty was to minus the rebate of 3.5 million. If I have 3 million and I minus 3.5 million, I get a negative answer. Okay, meaning my estate duty is 0. Meaning I will not be paying estate duty. Okay, but let's say my assets and property, DTB property, was 4 million, and my allowable deductions that I minus from there was 200,000 rand. That means I sit with a figure of 3.8 million. 3.8 million minus the rebate of 3.5 million from that will then give me a figure of positive 300,000 rand. Okay, that figure is referred to as your dutiable amount. That's 300,000 rand. Okay, 20% of that figure is your estate duty. So, for argument's sake, if it was 3.8 million minus the rebate of 3.5 million, always you will have an estate duty or a dutiable amount figure of 300,000 rand. 20% of that, which is 60,000 rand, will now be your estate duty. Okay, so for argument's sake, if your estate duty calculation was 60,000 rand, you will then go back to your liquidation account under your liabilities where you wrote estate duty, and you will put 60,000 rand there. Okay, so the first account, the liquidation account, you could not finalize without then going to do your estate duty account. So you did your second account, then you calculated your estate duty, and you went and put the figure in your liquidation account. Chances are your estate duty is nil. It's 0 because it's the figure minus 3.5 million gave you a negative answer. You will still go back to your liquidation account and put nil down there, right? So assets minus your liabilities, which is your admin expenses and your creditors, minus your estate duty, which is the second account that we just did or spoke about, right, is going to equal balance available for distribution. Okay. Those are your first two accounts, liquidation and estate duty. They're probably the toughest. The rest is a lot easier. All right. So you need to work through that. Please spend your time on estate duties addendums. The liquidation account is not too difficult. It's just obviously probably your longest account because you're specifying all your assets. Right. Now the purpose thereof was to get a balance available for distribution. Okay. This balance is now what's left in my account. Okay. And do you agree this balance now should be divided in terms of testate succession or in terms of intestate succession, depending on how I passed away. Right. So let's go to our distribution account, which is our third account. Right. So quite basic, guys. When it comes to the distribution account, all I'm specifying in this account, we said, is you showing who gets what in terms of the will or if it was intestate. I think we used the example of the question says you are married in community of property and you leave your entire estate to your heir being your child. I think we call them X and Y. So let's run on that. Okay. Let's say in our liquidation account, our balance available for distribution was a figure of 1 million. Okay. I will then carry that figure over to my distribution account. So I start my distribution account, you'll see it will start with balance available for distribution. You'll put that figure, the figure, your opening figure in your distribution account is your closing figure from your liquidation account. Okay. Now I need to distribute the account. There's a ranking order in the way we distribute accounts. Okay. Remember this. Ranked highest is your marriage regime. That always comes first. Second is legatees. And third is your heirs. Okay. How are we going to distribute? We're going to take from the question, what the question says. Right? We had the example if there was a will. Okay. And we said that the deceased is married in community of property. So you will note, the first person I distribute to is going to be my surviving spouse. Half of the estate. Because we married in COP. So if it was a 1 million that I carried forward from my liquidation account, I'm going to take 500,000 Rand and I'm going to give that to the surviving spouse. Okay. And there's going to be a figure of 500,000 Rand left. What does the question say? The question says the remainder of the estate must be given to an heir, being Y. Okay. So you agree. We've done the first ranking. We've sorted out the marriage regime. The next ranking is legatees. Did the question say anything about giving something specific to someone? If so, then we give that person what they're entitled to, right? But this question, or the practical example I'm running from, didn't say that. It just said the remainder to the heir. So once we've given halfway to the spouse, the next person in line is the legatees. There was no legatees. And the next person is the heir. And that was Y. So we then put Y down and we gave Y the remainder of the estate. You just need to show that in your distribution account. So it's simply just setting out what the will says or what the intestate succession law says, which you know how to do now because we did the sums, right? And you just got to distribute what's left of the estate to these people. Okay. When you mention people in the estate, it's always important to describe them. Okay? So when you describe someone, if I'm saying to my spouse, I need to give full names and surname, identity number, and very importantly, give the relation to the deceased. This is given to my surviving spouse, half share by virtue of marriage and community of property. If it's to the heir, this is given to Y, my surviving son or surviving daughter. Identity number XYZ, and why they're receiving the inheritance, they're receiving it because of the laws of intestate succession or because of a certain clause from a will. So you'll note that's the way we describe people, right? Okay, so then we didn't go and distribute everything. Okay, now we've shown everyone involved who's getting what. So we've shown the assets and the liabilities of liquidation account. We've shown the tax calculation for estate duty. And thirdly, we've now shown the balance that was left, how that's being distributed. Okay, so let's look at let's talk about our fourth sub-account in our L&D account. And we spoke about a recapitulation account. Okay. Now, we said the importance of this account is we are determining if we have enough cash in our estate to pay the liabilities and to pay estate duty. Okay. So the first thing we do is you'll note that you start your recapitulation account with what's referred to as cash and assets reduced to cash. Okay. This is important. You now go back to your liquidation account and you have a look at which assets was fixed. So, I mean, obviously a movable property or a car or a gun, if it's just there, we have the value of it, but it's not money. It's an asset that would need to be sold for money. Okay. But we also have a look at which assets are money. Okay. Maybe the bank accounts is cash that's lying there. The policies that paid out is cash that's lying there. So I go and I mention all those different items from my liquidation account under the assets that is cash. Okay. And I specify their cash value. I add it all up and I get a figure. That's the figure on top referred to as cash assets and assets reduced to cash. Okay. That was everything in money in our liquidation account. Okay. Now I know what my cash figure is in the estate. But now I need to figure out, is it enough? Okay. So the next step is to deduct from that cash figure every amount that needs to be paid in cash. So who needs to be paid in cash? That's all your liabilities need to be paid in cash. So your admin expenses and your creditors. You can't pay them with a couch, obviously. You need to pay them in cash. So I deduct my liability figure from that amount. What else needs to be paid in cash? If maybe you had a will and you had a legatee that you said 100,000 Rand must go there or 50,000 Rand must go there, then the legatees will need to form part of that calculation as well. Because that's something that must receive cash if it's specified so. What else needs to be paid in cash? Estate duty. When you did your estate duty addendum, you received the tax figure that you need to pay. That needs to be paid in cash. So I take that estate duty, I take those cash legacies, and I take the liabilities, and I deduct that figure from my cash available. And I see if I have a positive or a negative answer. If the answer is negative, it's a cash deficit. If the answer is positive, it's a cash surplus. Surplus is great. It means we can continue. If it's a deficit, we're going to need to sell some of the assets, the fixed assets, so that we have enough cash to pay everything. Okay. That was your recapitulation account. As there's a fiduciary account. Now, the fiduciary account we spoke about, that is when you receive an asset, but the way you received it was that at a certain stage, this asset needs to pass on to a second person. You would agree that that asset, that let's say it's a house that I'm living in, and it must now go to my child, for example. I can't list that house in my liquidation account as an asset when I pass away. Because it's not in my asset, I'm just living in it. My child, who's going to get it from me, they can list it as an asset. Okay, but I can't, I'm the fiduciary, right? So what I will do is I'll just show it in a fiduciary account. I'll describe the asset the same way I did in the liquidation account. Describe it, give it a value, etc., etc. But I'm just showing everyone that there was a house, okay, but it was not mine. That's why it did not fall in the asset in the liquidation account, but rather in the fiduciary account. Okay. The last one we spoke about, the sixth account that forms part of the L&D account was the income and expenditure account. And I leave this one for last because this account is separate from the other accounts. Okay, you will realize how all the accounts are dependent on one another. Okay. You can't finish liquidation without getting the estate duty figure. Once you finish liquidation, there's a balance that's left. That needs to be distributed. That is why we have the distribution account. Okay? And overall, if I want to pay the liabilities and pay everyone involved, I need to figure out if I have enough cash in the estate, which was the purpose of the recapitulation account. Okay? Income and expenditure is figures that have not been represented in your other accounts. This is income and expenses after date of death. Okay. If you look at your question, the question might say there's rental income of 30,000 Rand on dates that are after the date that the deceased passed away. Now we need to realize those amounts I can't put in my liquidation account because the liquidation account is just the value on date of death. So I need to resemble those figures in my income and expenditure account. So I'll have a heading of income, you'll see. I'll describe the asset or the money that came in after the date of death, and I'll put the figure. Okay. Once you've listed all of that, you then go to your expenditure. Now remember, if you have an income after date of death, you will always have at least one expenditure. The reason is, as an executor, you receive 3.5% of the total value of the gross assets of the liquidation account. Okay? But you're also entitled to 6% of all income that comes in after date of death. So if we have rental income of 30K that came in, there's going to naturally be an executor fee remuneration, expenditure. Okay? Now this executor remuneration is 6% of what I got in after date of death, which is, figure it out yourself, not a mathematician. But the point being that that's going to fall under an expenditure. Okay, 6% of that 30,000. Okay, now I'll list my income, I'll list my expenditure, and then you're going to once again have a figure: income minus expenditure. Now the chances is, let's think practically about this. This income and expenditure is figures that was not represented anywhere else. So let's say I have a scenario of income minus expenditure after date of death gives me 20,000 Rand. Okay. That 20,000 Rand is lying there. It's money that came in after date of death, but you agree I have not distributed this 20,000 because my distribution account came from my liquidation account. Remember the balance that got carried over. And this 20K was not resembled in the liquidation account. So your income and expenditure account, sort of see it as two accounts in one. You calculate your income and expenditure after date of death. And the amount that's left, we now need to do something with this figure. So what do? We go and distribute the amount that's left the same way we distributed it in the distribution accounts. That's why you will see the calculation continues after you have that figure in your examples in your books, because they take that figure and distribute it in terms of what the question is asking you to do. Okay, I do understand that this is a more theoretically based introduction, and that you will need practical experience with the L&D accounts, which you will find in your contact lectures. But I hope that you've taken notes of all of this, and when you do work through your L&D account at the back of your books, listen to this, see what I'm saying, where the figures are coming from, how they're getting carried forward, how the accounts are dependent on one another. You should understand now the purpose of each account, and it should become a lot easier for you to self-study on this. I hope these 4 segments assisted you in one way or another. And like I say, go through it. It's very important that when you do enter your contact lectures, you understand or you know already what you are struggling with and not, so that that can be resolved with your particular lecturer. All right. Thank you.